Well, with so much talk about the Fed and when they're going to taper, pull back on monetary easing, when are they going to raise interest rates, everybody now is focused on the jobs report once again. Well, this time around, in just a few moments, we're going to get private payrolls report coming out from ADP, and we're going to digest that and break that for you. Raymond James, the chief economist at Scott Brown, is standing by to weigh in on the jobs numbers. Markets reporter Dominic Chu will have all the trading reaction, and economics editor Mike McKee will give his perspective, the real deal on the economy and on the jobs market. Now, as we mentioned, private payrolls measured by the ADP expected to be up by 165,000. This would be, again, for the month of May. Would represent a pretty big jump from 119,000 that was released in the prior month for April. Usually there's a revision. The idea, or the expectation is how big is that revision going to be and how is that going to affect the outlook for the jobs market. As Mike had mentioned, though, this is private payrolls. It's not as much of what people are focused on right now when it comes to the jobs market. And at the same time, with payrolls, the expectation is at what point is the Fed going to step back from monetary easing? And if it were perhaps above 200 or 250,000, which is what some economists are saying, that might be the point where you see the Fed stepping back. Futures right now are lower ahead of these numbers in anticipation that perhaps there might be a miss. ADP also historically is not terribly accurate in terms of predicting where the Friday payrolls report will be. So in many ways, traders kind of take this number with a grain of salt. As we said, 165,000 is the number in private payrolls. Here come the numbers now. 135,000 is where we're at. So this is a pretty big miss, at least from economist surveys. 165,000 is where the expectation was. So we've missed this by about 30,000. Dom, what kind of reaction are you seeing in the market?
It's a little bit jumpy right now, Betty. Like you said, we were already in the red going into this number here. But with this miss on ADP, we're seeing perhaps a little bit of up and down action for stocks. We're down about 7 points going into the number. We took a bit of a dive on the numbers release, and we're back to just about where we were before. But we are, again, down 51 points for the Dow and down about 12 for the NASDAQ. You can see here we are near session lows. So, again, we are seeing signs that perhaps people are taking a pause in this kind of bull run for stocks. Remember, we're still hovering, at least hovering near those record highs for stocks. On the Treasury side of things, we're seeing a bit of a reaction here as well because people are buying up the safety of 10-year U.S. government Treasury notes. That pushes prices higher. Interest rates to the downside, 2.10% the last trade there. And you can see here, again, a nice gap lower here on the session lows for yields on the 10-year note. On the currency side of things, euro $1.3091, so just about flat versus the U.S. dollar. Dollar yen now, again, below that key 100 mark for, again, dollar yen. And we'll finish on commodities here. Crude oil, $93.81, and gold futures, $14.04. Betty, the last trade there.
Okay, Dom, thank you so much. Just stand by. So, Mike, give me your take on these numbers and the miss here. How significant is this going to be for the markets and also the Fed?
Well, we don't really know, but if you look at the 41,000 average miss over the last 6 months for ADP and you add it into this, you get to about 170 some odd thousand, which is approximately where the consensus forecast for private sector job growth creation is. And if you got that, that wouldn't be all that bad. The real question, as we talked about earlier, is whether you're going to see government payrolls subtract a whole lot from the total when we get to Friday. So it's hard to say whether this is a terrible number or not. With 135,000 plus 41,000, 176,000. You'd take that in the overall economy. Where did the jobs hiring come from? This is interesting. In this report, majority of jobs in the small business sector. We haven't seen too much of that, and we do see it.